What's driving all this, despite what we're seeing in the economy? And we're going to be joined by an analyst from Chapel Hill Denham. Her name is Boluwatife, and she's going to be telling us what's going on there. Boluwatife, she's Ishola. She's a consumer sector analyst at Chapel Hill Denham. Good afternoon. It's good to have you join us.
Good afternoon. Thank you for having me here.
Boluwatife, looking at the reports that you put out there for the consumer goods sector in Nigeria, after that Naira's drop, what changes did companies make to keep their business running?
So so one of the things we saw them do a lot was reduce their exposure to FX, and we saw them restructure loans. For example, we saw Cadbury convert its $7.7 million intercompany loan to equity. We saw international breweries coming to the capital market for a rights issue to raise about 580 billion naira to settle outstanding loans. We also saw NB do the same. So we saw them restructure their loans to reduce dollar-denominated liabilities. But we also saw them, move to local sourcing. And backward integration is a major theme here. However, we saw them look for more accelerated methods by substituting, raw materials. For example, we saw Unilever, start to locally source sorbitol that is produced from cassava starch, and rather than import sorbitol produced from corn starch. We also saw, Nestle announce that it was going to substitute locally sourced cassava starch. It was going to substitute imported corn starch for locally sourced cassava starch. So we saw it on two legs. We saw reduction of foreign exchange exposure from the loan leg. We also saw it from the input leg as well.
So which areas of the consumer goods are seeing the fastest recovery now? We've seen the FX issues, we've seen that devaluation and what it did to the real sector, but which consumer goods sectors are coming out of this quickest and why?
So actually, I think it's broad-based. It's not a particular sector per se. It's broad-based. Most of this consumer goods sector sort of follow the same strategy in terms of seeing how that they import some of their inputs, right? We have it on the brewer side. We also have it from the beverages side as well. So I think it's broad-based. It's not one particular side. Like the title of the report says, it's not a single hero story. It's actually across the consumer goods sector.
And so I just wanted to know, looking ahead, what could help or hinder the growth in this sector over the next few years? Looking at your report, you're reporting a jump in growth for 2025 and also for 2026. But what could help it or hinder that growth in the sector in the next few years?
All right. So from the perspective of what the companies can do or what they're doing, what I believe they can do is much more product innovation, as we don't necessarily expect to see them increase, prices in near term, seeing as, despite this inflationary pressure, Nigerian consumers are still very price sensitive. We expect to see them drive volume growth from capacity expansion, as well as, increased marketing and distribution expansion. That's what the companies can do. Now, what would happen in the economy generally? We believe that, first of all, Q4 is usually a strong year. That's one of the near-term catalysts. Q4, festive season, people spend more on food during the festive season. So that will give them a strong Q4 and will lead to an impressive full-year earnings results release that will be released in 2026. That's one. But we also expect to see the MPC have a dovish tilt next year, which will mean there will be lower borrowing costs that will support CapEx growth. So we see that these two factors, that is, the festivities as well as, lower borrowing costs, would support this sector. But there exist downside risks, such as the pre-election year, which will typically put pressure on the dollar to increase the demand for dollar. We may see, also move back to a situation where the FX is further devalued. And another thing to note is that if the if the FX, if the exchange rate appreciates, that is, the naira appreciates against the dollar, right, we may now see imported goods start to become competitive in the market again, competing with the local producers for market share. So, those we have near-term catalysts for the sector, but there also exist, some downside risks.
Boluwatife, you mentioned in your report that you expect the operating costs to rise faster than inflation in 2026. Why is that projection, especially for your estimated, what you expect in 2025 is that it should rise about 12.8%. That's below inflation. And right now for 2026, you expect it to be about 21.4% above inflation. Why do you have this projection? What are the factors that contributed to these numbers?
All right. So 2023, 2024, and partly 2025, what we've seen is that these consumer goods are trying to survive. That's what they're out here for, just trying to get out of the loss, trying to rebound, to recover from the loss. But moving into, if you look into their books, you see that most of the companies are already coming out of the water. And so 2026 will be a year for competition. Now, we're no longer just talking about survival, we're talking about growth. Now we're fighting for market share. And in a situation where there is competition for, market share, we're going to see intensified marketing. We're also going to see a lot of, research and distribution. We're also going to see distribution expansion in a bid to, capture market share. We've already even seen that start in 2025. For example, for Nestle, we saw them spend 2 times more on advertising than in the 9 months of this year than they spent in the same period last year. Another example is Guinness, under their new ownership, expanding into the north with their non-alcoholic offerings, which we expect would increase the cost of logistics. And we don't believe that the other consumer goods companies will just sit back and relax. They also will be in the market, fighting for consumers' money. So we expect to see that, increase operating expenses.
Okay, you've just talked about some acquisitions that took place. I just want to know quickly why multinational companies keep investing heavily in Nigeria's consumer market, even with the economic challenges that the country is facing.
All right. The facts are right there, right? Consumer goods sector is a defensive sector, right? And it has to do with volumes. And Nigeria has that in terms of population. We're estimated to be about 400 million people in 2050. That's a large population. That means volume right there. We also have quite a young demographic with a high urbanization rate, which means that, when people move to the urban areas, their propensity to buy packaged good increases. So we see that in terms of population size, in terms of demographics, as well as urbanization rate, Nigeria is right there, moving everything along. So, and that is one of the reasons why, or those are the reasons why the multinationals are staying in this country and reinvesting in this country. They are confident and committed to the market, and they believe in Nigeria's, consumption growth story.
Thank you so much. Boluwatife Ishola, consumer sector analyst for Chapel Hill Denham. Thank you so much for sharing your perspective and insights, and we'll possibly look forward to 2026, where consumer goods will be, dominating in the sectoral performance for the NGX. Thank you so much for your insights.
Thank you for having me here.